Okay, so if you own a home in the villages or you're thinking about buying here, there is something happening right now in Florida that you need to pay attention to.
And I want to be clear right up front, I'm not a realtor. Lily's the realtor.
That I am.
But I am someone who has been living in and following the villages community for a decade. I go to the meetings, I read the legislation, I follow what Tallahassee is doing. And when it comes to property taxes and how they affect people here, I know all about this stuff.
And that's exactly why we're doing this together. Because this one is one of those topics where you need a real estate side and a community side. We're going to give you both.
Florida just went through some extremely significant tax changes. And if you are a homeowner in the villages or a retiree on a fixed income or someone who is thinking about moving here, then this would affect you directly.
We're going to break down what changed and what it means for your property taxes, what protection you already have that you might not be using, and what you should be doing right now.
All right, well, let's get to it.
First, we're going to talk about the Florida tax landscape, why people come here.
Good place to start.
Let's start with the foundation. Because one of the number one reason people move to Florida, and specific to the villages, is taxes.
Yeah.
Florida has no state income tax, zero.
You know, and that really and truly, that is a really huge deal. If you're coming from a state like Ohio or Michigan or Illinois or New York for sure, then, you know, states where you might be paying 5, 6, even 10% state income tax on your retirement income, your pension or your Social Security.
Right. You move here and the tax burden is gone, which is why the villages have people moving in from basically every state in the country.
Yeah, but here's what people don't always think about before they move. Florida makes up for some of that with property taxes, and the property tax system in Florida is actually pretty complex, and there's a lot of layers to it.
There are, and that complexity is exactly what we're going to unpack today, because the recent changes coming out of Tallahassee took several of those layers at once.
Yeah, and if you know what's in the system, then you can take advantage of it or protect yourself from it.
Exactly. So let's walk through the structure first, then we talk about what's changing.
Okay.
So the protection already in place. Do you know yours?
Yeah, Florida has several built-in protections for homeowners, and I want to make sure that everyone watching knows all of them, because in the villages, I talk to people regularly who are leaving money on the table because they never filed for something they qualified for.
Let's start with the big one.
Okay, the big one is the Homestead Exemption. If your home is your primary residence, meaning you live here, you have a Florida driver's license, you're registered to vote here, you're entitled to up to $50,000 off your home's assessed value for property tax purposes.
The first $25,000 apply to all of your property taxes. The second $25,000 applies to everything except your school board taxes. But bottom line, it reduces what you're taxed on.
Yeah, and here's what kills me. Every year, there are homeowners in the villages who have lived here for years and have never filed for the Homestead Exemption. You have to file it. It doesn't just happen automatically.
You file once with the county property appraisal office and it renews automatically every year as long as you remain the primary resident.
Okay, so as long as you're here most of the year, right? Sumter County, Lake County, Marion County, the villages is in all those counties, and depending on where in the villages you are in one of those three. So you go to your county's property appraiser website, you file the application, and you save yourself thousands of dollars.
Now, the second protection, and this one is critical, especially if you've been here for a while, it's called Save Our Homes.
Save Our Homes is a fundamental constitutional amendment that caps how much your assessed value can increase every year. The cap is 3% or the rate of inflation, whichever is lower.
So even if home values in the villages go up 50% a year, which has happened, for example, asset value can only go up by 3%. Your tax bill is protected from runaway market swings.
That's why, you know, a lot of long-time villages residents have a huge gap between their market value and their assessed value. The market went up, but the taxes didn't follow it all the way.
Now, here is the part that gets really interesting, and this is where portability comes in.
Portability. if you sell your home in Florida and buy another one in Florida, you can take that Save Our Homes benefit, that gap between the market value and assessed value, and transfer it to your new property, or up to $500,000 of accumulated savings.
From a real estate perspective, this is a game changer for move-up buyers and downsizers. You don't start from zero on your new home. You bring your savings with you.
And a lot of people in the villages who are thinking about resizing or moving from a larger home to a smaller one don't realize they can carry that benefit over.
They really don't. The tax shakeup, what Florida just changed. Now, let's talk about what actually shifted, because Tallahassee has been busy.
Boy, they sure have. And it's good. Very busy. And not everything that's being proposed or passed is good news for every homeowner. Some of it is great, and some of it has unintended consequences, and some of it is still being debated.
So let's start with what's being passed on or is in motion. First Amendment 5, which Florida voters approved, adjusting the additional Homestead Exemption for inflation going forward. That means the $25,000 second exception is now indexed, so it doesn't erode over time as property values rise.
Okay, that's a really big win. For a long time, that number was frozen and inflation was eating away at the real value, but now it moves with the cost of living.
Yes. Second, there have been ongoing legislative conversation about expanding property tax exemption for seniors on fixed incomes. Some counties in Florida already offer an additional exception for homeowners 65 or older who meet an income threshold.
So here in the villages, in Sumter County, in Lake County, and Marion County, all three counties that make up the villages, seniors who qualify can get an additional exemption on top of the standard homestead. But again, you have to apply, and the income limits are set by the county legislature.
So if you are 65 or older, you have your homestead exemption for years, and you never look into the senior additional exception, that is homework assignment coming out on this video.
We're getting homework now. Now here's where it gets a little more complicated and where we need to pay special attention. There are proposals in Florida right now to drastically restructure how property taxes are collected. Some legislators have floated the idea of phasing out property taxes altogether at the local level and replacing that revenue with higher sales taxes.
Which sound great on the surface for homeowners.
Sounds great, but think about it from a village's perspective. A huge portion of our residents are on fixed incomes. They're not buying big ticket items every month. They're living on Social Security, pensions, and your tax burden shifts from property, which has caps and exemptions protecting you, to a consumption-based tax. So how does that math work for a retiree?
It can actually cost some residents more depending on their spending habits.
Exactly. And a lot of people haven't run those numbers yet. They hear no more property taxes and they celebrate without reading the fine print.
As a realtor, this also creates uncertainty in real estate market. If you're trying to compare the cost of owning in Florida to another state and the tax structure in the flats, that makes the calculation harder.
Yeah, which is why we're talking about it right now before decisions get made,
Now let's talk about the villages specific wrinkle. CDDs.
Yeah.
Okay, Melvin, talk to them about CDDs because this is something that is specific to the villagers, and a lot of people, especially buyers, do not fully understand it.
Well, I'll admit it took me a little while to grasp it, but CDD stands for Community Development District. Villages is one of the largest CDD communities in the country. And when you buy in the villages, your property tax bill has two parts: the regular county property taxes, which we've been talking about, and the CDD assessment.
The CDD is how the infrastructure was paid for. Roads, amenities, the town squares, the pool, the golf courses, all of that was built and financed through the CDD. And as a homeowner, you pay a portion of that bond back as part of your annual assessment.
Now, here's the thing. CDD fees are not covered by homestead exemption. They're not capped by Save Our Homes. They operate on their own schedule based on the original bond financing.
So when you're looking at a property in the villages and comparing taxes, you have to look at the total bill, counting taxes plus the CDD assessment to understand your real carrying cost.
Yeah. The good news is that CDD assessments do eventually expire once you pay off the bond on your house. Some of the older sections of the villages have already seen the CDDs drop significantly or go away entirely, and some people just pay them when they move in so they don't have to worry about it.
Right, which is one reason buyers sometimes prefer established neighborhoods over brand new constructions in the villages. The CDD on a new section is as is higher. In older section, it might be years from being paid off.
Yeah, a lot of houses that you put on the market have it paid off if they're further up north. So.
I heard the new ones are between $50,000 and $60,000.
And none of the Florida tax changes we're talking about affect CDD fees directly. They operate under different rules, so when you hear Florida's changing property taxes, you have to ask, does that include my CDD? And the answer most likely is no.
This is why I always tell buyers, when you're looking at a home in the villages, tell me the full number. Not just the county tax, not just the CDD, everything. That's your year cost of ownership.
Yeah, that's the real cost.
Now let's talk about what villagers, homeowners should do right now.
All right, let's make this actionable because I don't want people to walk away from this video informed but stuck. And here's what I tell my neighbors to do today. Number one, pull your property tax bill and look at your assessed value versus your market value. If there's a big gap, say your home is worth $400,000 and you're only assessed at $280,000, then that gap is Save Our Homes benefit working for you. Know what you have.
And if you're thinking about selling and buying somewhere else in Florida, talk to your realtor. That's me. About portability. That gap can move with you.
Yeah, that's pretty cool. So the second thing you need to do is verify your homestead exemption is on file. Go to your county property appraiser's website and look up your property. It should show homestead exemption in your records. If it doesn't, then you need to file immediately.
The deadline in Florida to file for homestead exemption is March 1st of the tax year. So if you missed it this year, mark your calendar for next January to get it early.
Yeah. Number three, if you are 65 or older and your income is at or below the county threshold, which in most Florida counties is around $35,000 to $36,000 in adjusted gross income, ask the senior additional exemption at your county property tax appraiser's office. The entire layer of savings is real.
Yes. Number 4, stay informed on the Tallahassee proposals, whether property taxes get reformed, replaced, or restructured. You want to know before it happens. Follow your county legislative updates. Read the village's news. Come back to this channel.
And number 5, and I mean this, if you have any doubt about what your tax situation looks like, especially if you're thinking about moving within Florida, selling, buying, or gifting your home, talk to a licensed CPA or tax advisor who specializes in Florida real estate. This is not a DIY situation.
And talk to your realtor because changes in that tax structure directly affect home values, carrying costs, and what buyers are willing to pay. Is all connected.
Okay. In our last segment, I wanted to leave you with this. The Villages was built on a promise, a quality retirement lifestyle at a price that made sense. And for a lot of people, our friends and neighbors, that promise has been kept, but that promise doesn't protect itself. The tax system, the CDD structure, the legislative changes coming out of Tallahassee, these are things that require us to always pay attention. Nobody's going to come knock on your door and say, hey, you're leaving $3,000 a year on the table because you haven't filed the right exemption. Nobody is going to warn you that the tax proposal that sounds great could actually cost you more. That's on us to stay informed, to ask questions, to talk to people like Lili who are in the market every day.
And that's exactly why we make these videos, because information is protection, especially when you're on a fixed income and every dollar matters. To recap, Florida Tax Shakeup purchased Homestead Exemption, save our home's protections, senior exceptions, and potentially the entire property tax structure. If you live in the villages, you also have CDD assessment to factor in, and those operate by different rules entirely.
So the bottom line is you need to know what you have. You need to file what you qualify for, watch what Tallahassee's doing. Don't assume that the changes being discussed will automatically work in your favor.
If you have questions about how any of these affect your home's value, your plans to buy or sell, or what your real cost of homeownership looks like, drop them in the comments. I'm here.
And if you know someone in the villages who should be watching this, send it to them. This is exactly the kind of thing that gets talked about at the Times Squares but never fully explained.
Subscribe so you don't miss our next one. We'll see you soon.
Stay informed.